All right, ladies and gentlemen, welcome to this deep dive into the gold reversal sniper strategy. We just had a setup last week, and in this video, we're gonna focus on that setup. All right, so first of all, let's just look at the chart and see what happened during the last couple of weeks. So what I'm gonna do right now is I'm gonna zoom out the 4-hour time frame chart, and then I'm just gonna draw the trend moves on this chart. Okay. So we're obviously seeing these trend moves over here. We had a bearish move and then a bullish move, bearish one, a bullish move. And then over here, we basically corrected this trend move. And then we had a huge bullish impulse. Okay. And as you can see over here at this point, at this zone, which was a resistance zone, because if we just go back, we can see these 4-hour candles over here. We had our first engulfing candle. Okay, let's just zoom in and see what actually happened there. So what I'm basically expecting here, after we've had this engulfing candle, I'm expecting a correction of this move here. Okay, I'm just expecting a correction of this move. Good. So if we just zoom in, we can see that this 4-hour candle was basically corrected. If you just use our Fibonacci tool, then we can see that this candle was actually corrected into the Fibonacci of 0.618. Unfortunately, we did not have a correction back into the opening, which is what we're actually looking for. But what we did have was a correction back into the Fibonacci of this candle. Following that, we had another 4-hour engulfing candle, which was the candle over here. Okay, so once I have the second engulfing candle, what I'm going to look for is I'm going to look for a setup. Okay, so this candle over here is going to be my first confirmation. Once the chart actually prints this candle, I'm going to jump to the 5-minute time frame and actually look for an entry. So on the 5-minute time frame, this was the candle that I just showed you. Okay, so if you just go back to the 4-hour time frame and we actually mark that candle, so this is the candle, and then we jump back to the 5-minute time frame, we can actually see which impulse that 4-hour candle printed in the 5-minute time frame. Okay, so this here was the 4-hour engulfing candle. Okay, so this was the impulse that basically printed the 4-hour time frame candle. Okay, and we can see that the very last candles from which this move started were over here. So what I'm going to do, I'm just going to mark these candles over here, which is my order block. Okay, so this is going to be my order block. All right, and then what I'm going to look for is basically I'm going to wait for a correction back into the 0.5 level of this order block. And we can see here that we had a beautiful pattern and a 3-step correction back into this order block. So what we could have done is just the following. We could have used and then we could have just drawn our target levels. So this would have been my take profit 1, and this would have been my take profit 2 at the Fibonacci extension. All right, at the Fibonacci extension of minus 0.27. And then what we did was we just entered our position at the 0.5 level of this order block. Okay, so my entry was 5,205. Okay, round psychological number. My stop loss was just above these wicks over here. Okay, what I don't want to do, I don't want to place my stop loss just right above the wicks. I want to leave some space. I want to give it some space, like maybe $0.50, maybe 5 pips, 10 pips for the trade to breathe. Okay, because I don't want to be stopped out because of spread. All right, so my take profit 1 is going to be my previous low, which was over here. The first target level, which was the take profit 1, already had a 15-to-1 risk to reward. Because why? Because our entry was at 205, then our stop loss was at 209. So the whole trade had a stop loss of $4 in gold, or 40 pips. Okay, that was take profit 1. I think I've told you guys in the strategy module that most of the time when the trade is actually at 10-to-1, I'm just closing most of my positions. Okay, so most of my position is going to be closed at 10-to-1. Then I'm just going to let the rest run to target 1 and to target 2. Okay, we can see here that our second target was not hit, but we've established earlier that at this point, guys, at 15-to-1, I'm going to have all of my position closed. Okay, that's just self-evident. Okay, so this was the trade that we took last week, and this gave us a clean 10%. Shared in the single group that I'm gonna close all of my positions at 10 to 1. So this trade gave us a beautiful 10 to 1 risk, 10% for the day. Okay, and then we actually took another trade. So what we did was, once price actually gives me the move that I'm anticipating, what I'm going to look for in the 1 minute and 5 minute time frame are harmonic patterns to take re-entries, basically. Okay, so let's just jump into the 1 minute time frame to see what actually happened there. Okay, good. So this was, I think this was February, exactly. Okay, so once price actually tapped into the order block, I'm going to look for harmonic patterns in the 1 minute and in the 5 minute time frame. So we can see that in the 1 minute time frame, once we've had a change of character, and then this change of character was corrected, this was a beautiful order block. And then following the order block, we actually got a beautiful two-step correction. So this would have been a trade that we could have taken on that same day. Okay, then you guys could see that we had another beautiful pattern over here. So this was the order block, 1 minute break of structure, two-step correction, and then we could have taken this trade as well. All right, the trade that we actually took was the harmonic pattern in the 5 minute time frame. Okay, let me just show it to you. So this was basically the swing trade, if you will, the trade of the day, which gave us a beautiful 10, 15 to 1 risk to reward. Okay, and while price actually gave us the move, I was anticipating new harmonic patterns to form in order to look for re-entries to just make more money. Okay, make more profits. So what do we see here? We see basically textbook A+ smart money / harmonic setup. Okay, you guys can see that we had an accumulation phase here. So this was the accumulation, and then we took out the liquidity was taken from here. So if we just move in, okay, so these are my equal highs and these are my equal lows, right? You can see that with this candle, with this buy to sell candle, okay, we actually formed a beautiful harmonic pattern over here. Okay, we actually formed a wonderful order block over here. So this candle over here is going to be my order block. Okay, our entry, and following this order block, we had a beautiful pattern. It's not hard to see. This is just a wonderful, beautiful, perfect pattern. All right, and then I want to position my entry into the 0.5 level of this order block, which was exactly at 5,190. All right, so our entry would have been 5,190. Or stop loss, yeah, this would have been a perfect entry, guys. But realistically, I think the trade idea that I actually shared was 188.5 or something like that. So it was the exact 0.5 level of this order block. The stop loss is just right above the order block, the candle. Let's put it at 191.5. And then my target levels are going to be the previous low at a risk to reward of 7.5 to 1. And then the Fibonacci extension of minus 0.27. Okay, this was a perfect 10 to 1 setup. And that was the second trade, right? And here's the thing. Here's what makes this strategy even more powerful. Okay, when I take this re-entry, what I could have done, I could have targeted this, my previous low, at the risk to reward of 7.5 to 1, the Fibonacci extension at 10 to 1, and then what I could have done as well, if I want to stay patient, I could even target the overall target level of the day, which was at 15 to 1. But of course, when I do this and I don't take any partials, I'm just running the risk of getting stopped out. Because what could have happened as well is just price could have come here, and then without me actually taking the partials, it could have stopped me out and then hit my target level, my overall higher time frame, if you will, target level. I didn't want to take that risk, so I just closed my position at the second. I think I took partials here at 5 to 1, and then I just let the rest run to 9.5 to 1, which gave us a clean 7% for that day. Okay. Then what happens also, we created another pattern. So if you actually pay attention to what happens here, so this was the next order block, right? And then what price did, it gave us another clean pattern, right? Came back to the order block. And then what we could have done is just enter another position, right? Just enter a second position over here, 0.5 level off this order block, and then stop loss just above this wick over here, and then target the next Fibonacci extension. And this would have been a beautiful, a perfect level, a perfect setup as well. Okay. So I hope you see how powerful the strategy is and how important it is to just wait for the setup and then make 10, 20, 30%, 30, even 50. But you could have done like 50% just on this one single day. Okay. Which makes the strategy extremely powerful and worth waiting for. And then I'm going to even give you one more addition. Okay. When price actually came into this order block, let's just zoom in and switch to the 1 minute time frame. I'm going to go back. I'm going to look for the same setup over here. You can see that price actually came back into the order block, into the 5 minute order block. And then for 5 to 10 minutes, what happened was we were actually in drawdown. Okay. So this trade was in drawdown. Okay. When I was in drawdown, I actually saw the 1 minute order block over here. Okay, so I'll just perfect my entry over here. I'm going to mark my 1 minute order block from which this move actually started. Okay, and you can see that price actually just came back into the 0.5 level of this 1 minute order block and then gave us the actual move. Okay, so this is just an idea of, so what I did here was I just added another position, which is very difficult because the entry was 190 and the stop loss was just 91.3.5. So you need to have some nerves and some trust in your strategy to actually take the position there. And trust in your system, trust in your plan, trust in your ability, your skill of reading the charts properly. And then this one single trade, if you actually add it at 190, which was the 0.5 level of this 1 minute order block, this could have given you a clean 20 to 1, guys. Okay, this is how powerful this strategy is. I hope this helps. This was an A+ textbook setup. And just keep learning, keep repeating the stuff, keep backtesting, and then see you in the next one.